On January 20th, Trump officially took office, beginning his second term. During his first term, Trump exerted pressure on China across various domains, including the economy, trade, technology, and geopolitics. With the arrival of the Trump 2.0 era, has his old rival, China, prepared itself. Many still describe Trump as unpredictable and volatile, which may be partially correct. However, the unpredictability is significantly diminished as much of his behavior is foreseeable. Trump may cause a new wave of economic shocks in China. Compared to his first term, China is now more vulnerable to such disruptions. During Trump's first term, China's economic growth was robust, reaching 6.9% at one point. However, after the pandemic, China's economic recovery has been sluggish, trapped in a negative feedback loop. Low consumer confidence has reduced demand and spending, leading to lower corporate revenues and layoffs. This has further heightened societal concerns about employment and weakened consumer sentiment. It's obvious that things are declining. People are afraid to spend, and those of us running businesses have seen fewer key customers. Customers who used to spend over 1,000 yuan are now rare. At the end of September and early October last year, China launched a series of intensive economic stimulus policies to boost public confidence. Recently, the reserve requirement ratio was reduced by 0.5 percentage points, injecting approximately 1 trillion yuan of long-term liquidity into financial markets. The stock market saw consecutive gains, temporarily lifting a three-year gloom, but the momentum was short-lived. More notable is the significant shift in China's policy style. For instance, the People's Bank of China unprecedentedly allowed banks to lend directly to enterprises for stock buybacks. Previously, China preferred to stimulate the economy through infrastructure investment and manufacturing subsidies, avoiding injecting funds directly into financial markets to prevent an over-financialized economy. Experts note that this shift reflects the growing societal impact of economic stagnation on China's social stability, where stability remains the leadership's bottom line. The second area of preparation has been stabilizing trade and stockpiling reserves. For example, the RMB exchange rate against the US dollar fell below 7.3 in January 2025, hitting a 16-month low. This devaluation is partly a preemptive measure against potential tariffs imposed by a re-elected Trump. Allowing moderate RMB depreciation enhances the price competitiveness of Chinese goods in global markets and creates a buffer for potential tariff shocks. China has also been reducing its holdings of U.S. Treasury bonds, cutting from a peak of $1.3 trillion to $760 billion at the time of Trump's election, a reduction of over 40%. Meanwhile, the People's Bank of China has been stockpiling gold. Before the pandemic, China's gold reserves were around 1,948 tons, but within 2 years after the pandemic, China's central bank publicly increased its reserves by approximately 16.6%. Considering undisclosed transactions, the actual increase might be even more significant. This gold accumulation wasn't evenly distributed. In the 6 months leading up to Trump's election, China didn't purchase gold. However, in the months following his election, a continuous buying spree began. These measures aimed to reduce exposure to risks in the U.S. Treasury market, especially in the context of Western financial sanctions against Russia following the Russia-Ukraine conflict. Economist Zhu Yongding also believes that the strategic reduction of U.S. Treasury holdings reflects China's concerns about the weaponization of the dollar. In diplomacy, China has intensified interactions with neighboring countries, particularly repairing its long-strained relationship with Japan. Finally, in October 2024, during APEC and G20 summits in South America, Japan's new Prime Minister Shigeru Ishiba met with China's supreme leader. Both sides expressed a desire to establish stable bilateral relations to address complex international dynamics. Subsequently, Japan's foreign minister visited China to lay the groundwork for mutual visits by the two nations' leaders. In the second month following Trump's election, China also engaged closely with Indonesia, the world's fourth most populous country and ASEAN's largest economy. During Trump's first term in 2017, the U.S. accounted for 19% of China's total exports, while ASEAN accounted for 12%. These figures have since reversed, with ASEAN surpassing the U.S. as China's largest trading partner. This shift demonstrates China's efforts to diversify its trade partnerships and reduce dependence on the U.S. Can China's preparations in these 4 areas withstand a second Trump term? Experts believe that while China's preparations this time are more proactive and comprehensive, they still cannot fully counteract Trump's impact. Forecasts indicate that China's actual economic growth in 2025 will decrease by 0.3 percentage points, and U.S.-China relations over the next year will remain turbulent.